Sort of halfway through the month. It's Thursday before Easter in many countries. So markets are closed tomorrow and on Monday again in many countries. The US is actually open on Monday. They don't celebrate Easter Monday, but most of Europe, Australia, Canada, New Zealand, all those markets will be closed on Monday as well as Friday tomorrow. So a shortened week. And what a week it's been. All sorts of action going on. We've obviously, unfortunately, got the tragic situation in Ukraine continues to unfold and undermined sentiment and market action to an extent. We've also had big news from the central banks. We've had the New Zealand Central Bank and the Central Bank of Canada both lifting interest rates by 50 basis points earlier this week. And then we've just had the ECB in the last hour or so, keeping everything intact, basically, confirming that their asset purchase program their additional asset purchase program, PPP, will expire in the third quarter, and there's no chance of any rate hikes before the third quarter. They talked about flexibility in the statement. Miss Lagarde, in her press conference, which I think is actually still going on, talks about downside risk to the economy increased substantially, inflation a higher risk. That goes without saying, doesn't it? And we've had some blockbuster inflation data out of the UK and the US in particular. 40-year high for US CPI, 30-year high for UK CPI. The core number out of the UK was strong as well. Excuse me, the talk of peak inflation started to circulate when the core number from the US earlier in the week was less than expected. But when we drilled down into that, most of the that core miss was to do with the collapse in second-hand car prices. So it's a very obviously 1 month does not make a trend, but it certainly started to circulate on the newswires about this idea that March, April may be the peak for inflation. I think that's far too early to tell. Obviously, clearly in the UK, that's not going to be the case. Europe also suffering from record high inflation rates, as Mr. Lagarde just confirmed. So good afternoon, everyone. I hope you're well. Let's bring up the charts. So obviously we're going to start with the dollar and the dollar index. Whoops, what do I do there? There we go. Dollar. This is the dollar index today. This is the 1 hour chart on dollar index, and we're back over 100. Big rally here for the dollar. A weakening euro on what Ms. Lagarde had to say or is saying. But you can see here the stochastic here. You can see the stochastic there significantly into its oversold area. But the MACD remains under signal line as far as the histogram is concerned, and the signal line just started to turn up, but certainly triggered long earlier dollar index. More importantly, perhaps the euro here. We were up at 109.27 earlier. We've come down very significantly, 108.35. Remember, we tested 108 yesterday. So good afternoon, everyone. Let's have a look at what we want to have a look at. There's a lot of you asking about the euro. So I know folks asked about the euro. Emma's asking about the euro, and Jessica is also asking about the euro as far as I can see here. Yeah, Ovid, I'm very well, thank you, my friend. So let's leave Jessica's little comment up here about euro. So this is euro dollar on the 1 hour, but let's just go up to the higher time frame. So we've if we go to the daily, we saw yesterday, this is the daily time frame. We can see we're pushing lower here in mid-April. We've gone under our end of day March low. But if we just zoom this up, you can see our intraday test of 108 here at the beginning of March is also being tested here in the middle of April. So the trend remains very much to the downside from this rally at the end of March. So April's been a down month so far for euro dollar, and that continues to be the case. So we need to break back over 109, as you can see. Let me zoom this up a wee bit. We need to break back over 109 here on an end of day basis if this is going to start to move up. Our midline here in the Bollinger Band sits up here at 109.68. So it's still weak. The yellow line and the green line are the 5 and the 9 EMAs. I think 9 and the 5. Yeah, so we're just above the 5-day EMA. But intraday, as you saw, the anticipation of the ECB sort of drifted higher into close yesterday. We went over 109 briefly this morning. And here, as the statement came out, a bit more hawkishness was expected clearly in the market. But this is a weaker euro, a stronger dollar to an extent as well today. So this is the announcement here at 2:45 server time, and we've come down. Miss Lagarde hasn't eased that at all in her press conference in the last hour or so. So we've moved down. We're currently trading at 108.35, and support from yesterday comes in, as I say, 108.15. I think it was 108.8 for a new support. So that's the intraday. As far as an end of hours trade's concerned, first support sits there, 108.15. That's where 108.15 came from. But here we're trading to the downside. So 108.15 through there from yesterday. You can see the round number takes to 15. These hourly candles here. So moving to the downside, guys. Okay. Ode's asking about the Kiwi. Kiwi, interestingly, reversed, even though we've got Kiwi here. I'm going to put the Kiwi here. I should have the Kiwi here. I've got to get a sort of file. New chart. Let's have a look. USD. No, sorry, it's the New Zealand card. Let's have a look. No, let me just find it. Right, file. The chart. Forex. New Zealand. A minute, let me just hang up inside. That's my view. I can't find the Kiwi. Where's the Kiwi gone? Aussie. There we go. Sorry. Right, sorry about that. New workstation. Sorry, Ode. Right, I'm back with you. Let me just go back to yesterday. I'll zoom this in I'll zoom this out a wee bit. So this was when we'd rallied here over to test 169 highs here at ahead of the as the RBNZ announced earlier in the week here. But then we turned on our tail, rejecting 69, briefly went over dot 69, and then fell very, very aggressively yesterday. Basically, what the RBNZ said yesterday on was that basically all they've done is bring forward their rate hike cycle. They didn't really change the outlook, so we fell quite significantly. We fell 150 pips, which is a very significant move for the Kiwi here against the dollar. So we went down to dot 67.55. Got significantly oversold. You can see here on the stochastics here. Then returned. We closed around 67.80. Now we rallied today. So this morning it was our best performing currency pair as the European markets opened. We'd rallied to test 68.35. It's rolled over a tad now. 68.35. There's our tops today, and then we've rolled back down. So going forward. From here, if we look at the daily time frame, it's really, the dollar is bid still. The dollar hike cycle from the Fed a lot of it's obviously priced in now, but as you can see here, the Kiwi's fallen significantly during April. Even with a 50 basis point rate hike from the RBNZ earlier in the week, we had a very significant volatile day yesterday, we just pointed out. But overall, we're back down again. So the dollar is outbidding the Kiwi. The Bollinger Bands here, if you can see here, see how they're white. We pinched in, which is always a good sign. This up day before the always good sign for coming volatility, because the bottom of the Bollinger Band comes in, the top of the Bollinger Band comes down. We got that squeeze, and then we get an expansion of volatility on the day of the announcement. And then we ended down. So we ended the day lower yesterday. We're up today at the moment, but next support comes in here at 75.50, and here on that would take us the close of those 2 days actually takes to 0.7445. So that's a key support area for the Kiwi. So that's the next downside pressure here. So again, on a daily basis, end of day basis, it's in the lower half of the Bollinger Band. The Bollinger Bands are widening, so we're pressure to the downside. See here as we move forward. Okay, FNA, I don't know what time frame you trade, but certainly that's the daily is down. So if we go down the time frame, so 4 hour remains down, having spiked up on the RBNZ. We bounced onto this 67.50 area, and we've rallied up at the moment, but the 4 hour here needs to break that 68.35, a high of the day, and we're rolling down. So again, the stochastics has rolled over. So the last 3 4 hour candles, or last 2 4 hour candles that have completely are moving to the downside. Down on the 1 hour time frame, similar, there's that resistance 68.35, and it's sort of rolled over from there. And now the 1 hour time frame in this current candle is into the lower half of the Bollinger Band at the moment. But again, see that squeeze there on the 1 hour time frame, took us higher, ran to that resistance from the daily, and then we've moved down for the rest of the day. So that's looking like it's rolled over, doesn't it? So Jessica, good afternoon. Emma, good afternoon. Ode, good morning. Good morning from Jamaica. Hope things are well and safe over there. Euro, we just had a look at. Let's have a look at it again, as you're all here. Let's have a look. Where's my Euro gone? As we say, it was all about what's Euro? Oh, I'm not having a good day today. Where's my Euro gone? Where's it gone? Let me just get the window. Tell the window. I must be able to find it. It's disappeared, doesn't it? Right, let's drag it over from here. There's our Euro. There we are. Let's just drag him in. There he is. I overwrote another channel. That's what's on. So, as I was saying before, really, we need to cover 109 on the daily time frame. Up here, we're down at 108.20. It's really biased lower. As you can see here, big reaction to the statement. More expectation of bullishness was expected. Didn't happen, and we've rolled over. So that's what I've done there. So pressure to the downside. Handshake. Sorry, my functioning very well. Seems like dollar is on the rise now. Will US market open have an effect on it? Well, we're 20 minutes away. Obviously, the big news as far as the markets are concerned, Anche, is that announcement earlier that Elon Musk has offered to buy all of Twitter. Remember, he's a 9% stockholder at the moment. The board and he sort of turned down him becoming a board member. So now he's posted an aggressive takeover bid, a hostile takeover bid at $54.20. Yesterday, Twitter closed around 40 something or other. It was up 13% at one point, but it's cooled very significantly since then. It was only up about 5% last time I looked. And Tesla, obviously, how is he going to pay for this offer? Tesla shares have obviously come down as well, and they continue to come down. So, they didn't move initially, but so the big boost in pre-market for Twitter has come down. The initial fall in Tesla was quite small, but again, that's extended as we come into open. As far as the dollar's concerned for the rest of the day, it looks very positive, doesn't it? So here you talk about the dollar. We look at the dollar index. It's had a strong few hours, and this is to do with the euro weakness here. Remember, the dollar index is only comprised of 6 other currencies, things like sterling and yen and CAD and the Swedish crown. But the biggest weighting in the dollar index is the euro itself. So many people say it's not a real reflection of the dollar, but it's and Reuters have got their own index and Bloomberg have their own dollar index. But really, it's the dollar index. This one, the USD index, is the key one. So we're back up. The key thing is here intraday and on an end of day basis. We're back over this big psychological level at 100. If we take this up to the daily time frame, you can see 145 was our intraday high yesterday. And if we go back, if I zoom this in, 145 was our intraday high yesterday. And if we go back to the 2 hour time frame, you can see 145 was our intraday high yesterday. And if we go back to the 2 hour time frame, you can see 145 was our intraday high yesterday. And if we go back to the 2 hour time frame, you can see 145 was our intraday high yesterday. And if we go back to the 2 hour time frame, you can see 145 was our intraday high yesterday. And if we go back to the 2 hour time frame, you can see 145 was our intraday high yesterday. And if we go back to the 2 hour time frame, you can see 145 was our intraday high yesterday. And if we go back to the 2 hour time frame, you can see 145 was our intraday high yesterday. And if we go back to the 2 hour time frame, you can see 145 was our intraday high yesterday. And if we go back to the 2 hour time frame, you can see 145 was our intraday high yesterday. And if we go back to the 2 hour time frame, you can see When am I zoom this in? You can see this was the a key Fibonacci level which we got to yesterday, 100.45 from this last leg up here, this leg here. So it's an extension higher to 145, which we got to, then it's rolled over. So some of the fib levels take us to possibly 103 on the higher time. So the dollar remains bid. If we look at this, if I zoom this out a wee bit, and we just look at this we go up the time frames, we go up to the weekly and the monthly, you can see what a strong rally the dollar has had for 2022 thus far. And if we go up to the monthly chart here, you can see that this 145, we need to go all the way back to April and May 2017. So levels, and then before that was here at the beginning of 2020 as well. So dollar remains bid on the higher time frames still, basically, thus far. So I say, as far as today is concerned, the weeks and the euros help lift the dollar index itself. The actual, you're talking about market open. There's no point in me going down the lower time range. You see this a bit, this exaggerated move. So dollar is certainly moved. But if you want to have a look at this, let's go down the last 5 minutes. You can see it's being bid here. This was the 5 minute time frame for the dollar index. This is the announcement at 14:45. So we went up, retraced a wee bit, and then rallied through 100, and it's continued. So that, as the market's open in 5 minutes, that's still looking quite well bid. Obviously, that level is sorry, what was I talking about? Yeah, this 45 level that we just talked about here. Level from earlier yesterday is next target to the upside. So off we go. 133, 127 is our spread on the dollar index there at the moment. Jessica, we said hello, didn't we? Is next. Sorry, there's lots of questions coming in here. Ovi, I'm very well, thank you. I hope you're well. Emma's asking about the Dow. A big update yesterday. Where's my Dow? My Dow's here. Big update yesterday from down days earlier in the week. This is the daily chart. Yes, it's the daily chart on the Dow. So you can still very clearly see. Let's put this right on here. You can see, we've topped out towards the end of March, and April's been weak, and we continue to move down. But one could argue at the moment we're back over that trend line or that ray there from the high in March. So we shall see. But we're at the bottom of the Bollinger Band. It's bounced up a wee bit. If I insert, moving average. I insert the 50 period, or the two. Actually, just put the 200 in for the sake of the 200. The red line here. Let me just change that to the red line here is the 200-day moving average for the Dow Industrials. So we've been playing with that level for all of April, basically. We ran into it, found support, we bounced off it, big break through it again here on the 11th. And then we went down to test the 34,000 level earlier in the week, and then we bounced off that. So we had 2 down days, a big update yesterday to recover that. So currently we're back over the 200-day move now, which we're broken that down trend line for now. Obviously, we can't make a call on that, but this is our key resistance level, which we closed over yesterday, 34,487, call it 34,500 for the sake of round numbers. And we're rising again today. So in the shorter term, the middle of the Bollinger Band now sits here above today's futures at 34,700. So a break over that for close of trade today will be quite positive, okay, to the upside, Emma. If you're trading this intraday, let's look at what this market is moving intraday. Yeah, this is a spot price. So again, we've sort of just gone sideways. If we rallied into 34,635, we can't push any higher than that. So there's the 200-day moving average, or the 200-hour moving average, I should say, sits there at 34,550. So today, that's provided our support at the moment. So that's your key support today going forward. And I say we're above that daily. That red line there is that downtrend line we just wrote on. So we're above that at the moment. So for the last few hours, it's been relatively bullish. Our intraday high at the moment, that fractal high there, was pushed to 34,687. So that's the, perhaps your first target level to a positive day. The pre-market levels at 34,000. Am I reading that correctly? Yeah, 688. So current hour is up. There's our support. See if that holds, and then 34,487, as you said earlier, intraday, Emma, for the Dow. Ibrahim, euro, yen. Let's have a look at euro, yen. I saw that earlier, I'm sure I did. Did I not? Perhaps not. That's all right. So let's have a look at it over here, euro, yen. Here, daily basis, euro yen remains bid here. Ibrahim, I don't know what time frame you're trading it, but it's well over its 20-day moving average. We've sort of ran out of steam as we've got to 130, testing of 137. So 137 sits around about there. There we are, 137. That's our key resistance here towards the end of March. We couldn't close above that on an end of day basis. We've dipped down. We've got support at around about 134,500, I'd say at the moment. There we go. 134,500 sits around about there. So that's our quite a big range. That's our support for April, 134,500. And it's, it needs to break out of that either to the upside or to the downside, which way it's going to go at the moment, sort of bit range bound. So this week, it's been relatively well bid. Let's have a look. So 4 hour, again, running into 137 and back down. The 4 hours moved into the lower half of the Bollinger Band at the moment. So 4 hour support sits there. Let's change the color on that one. Object list. It's not so. Let's just make that a single line, but make it a dotted line. So that's our 4 hour support at 135.67. So that's the next line down. Below that, we could move all the way down to this 134.50, the bottom of the daily channel. So if that breaks there, and you see how that level from earlier is the bottom of the Bollinger Band now, as well as we're starting to roll over on the 4 hour time frame. In fact, yes, that is the bottom. Looking at the Bollinger Band, but there we are on the 4 hour time frame. The 1 hour time frame. Let's see in that bit again. It's a bit more action. Obviously, weaker euro as we'd expect today across the board. And interestingly, the 1 hour is testing the 200 hour moving average support, which sits at 135.75 today. So breached. That would have gone lower again on the ECB announcement. And again, like we saw with the euro dollar, sort of sideways action, but more biased to the upside. We're expecting a bit more hawkishness perhaps from the ECB marks. They got ahead of themselves. And we've come down since then. So that's moving down. Support sits there initially now, intraday on a 1 hour basis. Then we've got here from that 130, let's move that down. The actual low from earlier in the week on Tuesday, it was 135.60. Interestingly here, you see the histogram here on the MACD. Very, very small, but it's ticked under the zero line, and the signal line itself is moving down. Although this stochastic here, the fast-moving stochastic here, 533, is already into its overbought area. So you might expect some sort of support here on the 200-hour moving average at 135.75, which we've had because we currently trade at 135 or 136 as well as a round number. So 136, exactly where we are now. Then the 200-hour, and then Tuesday's low down here at 135.60. Your support areas, Ibrahim, or your target areas, depends what you're doing. Surin, good afternoon. Hope you are well. Can you check CAD yen, please? Of course we can. That is what we're here for. Let me have a look. It's not down there. I thought I saw it earlier. No, it's CAD Swiss, not CAD yen. But let's have a look at CAD yen. C for CAD. CAD yen. There we go. So CAD yen. Time frame, Surin. If you don't, well, let's default to the daily. So what's the trend saying? Well, the trend is very strong. We're up. We're way over our, that's a nice break. Oh, I love that chart. Love that chart. Look at this. Classic trend following chart. Lots and lots of sideways action, lots of patience. January, nothing happened. February, nothing happened. A great deal happened in March, and then bang, here on the 11th of March, we've had massive breakout, or not massive breakout, but a significant breakout from that level there. Our sideways action, it's down here. There we go, at 91 or whatever it was. 91, 91.50 was the big break, wasn't it? Here on the 11th, and rallied all the way from down here at 91.40 to 99.87, and we must have breached 100. This is the psychological idea of getting to 100 must have already happened, or is it not? 100.00. We must have done, surely. Indeed, we have. There we go. 100 is around about there, isn't it? There we go. 100. So breached it here towards on the big rally. Final surge of buying. Right, that was the pinnacle of the buying. Then we cooled for 3 days. Then we rallied at the beginning of April. A wee bit of a dip, and then we've rallied this week as well. So 100, big psychological level. Serene, I hope you're on the right side of this rally. The oil price continues to support the Canadian dollar. Obviously, the Bank of Canada supported the Canadian dollar with its 50 basis point rise. On the opposite side of things, we've got the Bank of Japan saying exactly the opposite. They're going to keep, be as supportive as possible for the Japanese economy. They're going to keep competitive policy going as long as possible. I think it was Suzuki, the finance minister, said this morning something about inflation or deflation in China is something they haven't got over yet. Everybody else is worrying about these massive rises in costs and prices in the rest of the world, while the Japanese are still talking about deflation. So that's adding pressure to the yen, which is incredibly weak. That dollar yen has been at 20-year highs over 126 this week, and the Canadian dollar following suit to the upside. So 100 needs to break and breach on an end of day basis. And again, I would expect some sort of profit taking to happen when we get to that level. We're banging right into it today. Big up day. Yes, it doesn't want to break that 100, but if it does, it could breach that and move higher again. Let me have a look at what the weekly chart is telling me here for CAD yen, Surin. The weekly chart, we're 1, 2, 3, 4, 5, 6 consecutive weeks higher. And if I zoom in to tell me where's our next resistance on the weekly chart, it's way off the chart, isn't it? So that's going all the way back to September 2016. So this breach here of 90, that 91.34 area on our daily was a key level that we've broken out from, that we saw on that daily. Went sideways. Longer markets congest and consolidate, going sideways, the bigger and more significant and aggressive the move can be, as we just saw that on that big, huge breakout we've just seen for the CAD yen pairs, supported obviously by the rising oil price, which is affecting everything and everybody, obviously. So if we go up to the next time frame for this pair, we'd see, well, where is the next resistance? Well, this is the monthly now. This is a monthly chart going all the way back to 2015, 2016. So let's zoom in and see where the next stall might be. Well, if we follow this 100 line to the left, where do we get to? Well, we get to the middle of 2015. And what happened then? Well, it ran into that and then bounced off. The last time, it went through it towards the end of 2014, long time ago, 7 years ago now, 8 years ago, November 2014, we went through it for 1 month, ran out of steam at 103 or 104. So 104 really was the stalling point there we go, 104. So yeah, it was the stalling point, and then it came down, and it came down really aggressively in January, didn't it? So that 100 level hasn't really got any technical support areas here on these higher timeframes, but obviously psychologically, it's very, very significant, and it's proven resistance. Explains why it's proven resistance on this daily time frame. So, Surin, it remains very, very much bid. Your support here sits at the 20-day moving average at 97 or 90, 97, 92. So call it 98 is your support area. So you've got a big, 200 pip range there, and that remains bid to the upside. CAD yen. Tarek, we talked about euro before. Basically, we're testing 108 again. where's it go? We're down here and we're moving down again. So 108.8. So we're testing. We're currently, as we speak, we can see we're testing these lows from earlier in the week. Let's put the period separators on, so I'll tell you what I'm doing. From yesterday, we're below yesterday's low, or certainly testing yesterday's low, 108.8. And 108 itself is obviously coming into play and may bringing in indicator list, bringing in. Oh, let me put that on an object list, not beginners list. Bringing in support. Let me just make that a big thick one because it's a key number. 108 for you there. There's 108 on your chart there, so you can see. That looks like that's inevitably. We've lost. Says we've lost connection. I don't think you can still hear me and see me, but I'm getting a message here on my system saying I've lost. My workstation is making an awful fuzzing noise. I don't know if you can still hear me, but anyway, let's keep going. So I'm assuming you're going to be there. Zahor, which moving averages are on the chart? Right, let's just go through them. Zahor, we've got the Bollinger Band, okay, which remember that they're 2 standard deviations away from whatever your count back is with your Bollinger Band. So here it's a standard setup, so it's the 20 period, so 20 periods back. Here 20 hours back. 2 standard deviations away from the price action is the upper Bollinger Band, and 2 standard deviations negatively from the average price is the lower Bollinger Band. The midline in the Bollinger Band gives you the 20 period moving average, basically for the hour or whatever time frame you're on. So here on the daily time frame, that's the 20-day moving average. So the other things you've got on this chart is the yellow line, which is the 9-period exponential moving average, not the simple moving average. Doesn't really matter, to be honest, but that's the because it's Bollinger Band, it gives you a simple moving average. The exponential moving average is the 9-period on the yellow, and the green one is the 5-period. So I normally, a setup we use is the 21 EMA, which is like the middle point of the Bollinger Band, but you don't get the volatility range that you do get with Bollinger Band. So if you wanted to use 3 moving averages, Zahor, use the 21 EMA, the 9-period EMA, and the 5-period EMA. Some people I've got another strategy that uses the 3, the 5, and the 21. Gets a bit closer to the price action. If you don't want to worry about watching the price itself, the 3 EMA is quite a good one to use as well. But that's the setup on this particular setup at the moment. It's also got the MACD here as a standard setup below. It's got stochastics as well, and the RSI is also on here just because they're sorry, I'm just getting some spam on the this particular setup. Okay, so where have we got to? I see a lot of buys here now. Boobish. I don't know what you're talking about. I don't know what you're talking about, Peter. You're talking about the euro. You're talking about the pound. I don't know what you're talking about. Toric, we just talked about. So the average Imran's asking about. First person asked about gold. That's very surprising for this session. You normally get inundated with people asking about gold, Imran. But let's have a look at gold. Gold's interesting. Last week, it's gone through some key levels and provided quite a robust move. Can't really see that on this 1-hour chart, but we've got the daily time frame. You can see here, with not a lot of action had been going on. We've been supported down here during the second half of March and the beginning of April, around about the 1920 level. We didn't want to go below that. We couldn't close. So that's a big, strong support here, 1920. But equally, we didn't want to really break out, certainly of the 1950 area. We did for a day, and then we came back quite aggressively back to the 1920. So there's a big $30 range for most of March and the first half of April. And just this week, we've broken out the 1950 level and closed on a daily basis above that. So here, earlier in the week, we broke out here. It's a minor breakout, it's minor first break or first suggestion we might be moving higher. And then what do we do? Well, we went to the next $25 level. So if we're going up in 25 quarterly, if you like, we then went and tested 1975 to the upside. And that's what we did earlier in the week, and we've done that now. And then yesterday, we closed higher again, and we closed the session up here at 1977.50. So another relatively positive start. So we've had 5 or 6 days positive action for gold, Imran. Is the breakout going to hold? Well, nobody knows, but it looks relatively positive for now. Again, using this trend following strategy, you would have got a tentative long the day before we broke over 1950 here on the 8th, when we broke the moving averages had crossed. That's how you use this strategy. The 5 and the 9 moving average has to cross, and we're also in the top half of the Bollinger Band here. So we've got the 20, the 9, and the 5 all nicely aligned. They're moving averages, and they're starting to move up this week as well. So the angle is starting to move. So what we're looking for, see how the Bollinger Band has come in and squeezed, hasn't pulled in like we saw significantly on those other charts, but it's still come in, and now we're stretching. So you see the Bollinger Bands are widening, so the move up is a bit supported. The MACD signal line here came down, flattened out the second half of March and the first half of April, and then it's starting to show some action to the upside, and the histogram's also moving up. Stochastic here, the fast-moving stochastic here is moving into its bought area, but don't worry about that at the moment. That's still moving up, but that is perhaps showing some signs of weakness, but it's also quite flat. So it's moved into the overbought zone, not spikily, but with a flat action. See the flat action there? So people may be looking to perhaps short this at that 1975 resistance level. As I say, remember the major cash markets are closed tomorrow, Friday, and many of them on Monday as well. US is actually open on Monday, but the other main global markets are closed, Japan and China, tomorrow and Monday. So beware of that. But basically, Imran, gold is sort of bid here on this daily time frame. So if we come down the time frames, the 4-hour looks quite spiky as well. We've got support here. If you're trading it on the 4-hour, support is the midline of the Bollinger Band there at 1966.40, and it's been bid and over in the top half of that Bollinger Band there since the 8th. Here you can see that's quite a nice strong candle there, moving up, retraced, moved up, and through that 1977.50 level on the daily time frame. As far as the intraday market's concerned, it's a bit messier. Zoom in here. Where am I going? There we go. So again, you see how we've rallied up. We've sort of got then consolidated into yesterday's close. Bit of sideways action today, and it's sort of biased, if anything, to the downside today. So how the fractal highs, those little triangles, see those little triangles there, we sort of rolled over as we've got to this 1770 intraday. We went to 1780 level. 1980 level. So 1980 has proved sort of where the fractal highs are today and yesterday. And we sort of rolled down from there. We're currently trading at 1968. So again, we're sort of pushing the day lows at the moment. So as the markets opened in the United States, the stock markets, we're sort of starting to move down here on the gold market. And again, first sign of weakness here. You see the MACD signal line rolling over quite really nicely, and the histogram in the current hour. Obviously, we can't make a decision on this particular candle for another 13 minutes because it hasn't completed. But certainly, we had 2 up hours and had a big rejection in this 3 o'clock to 4 o'clock candle. And we're currently moving down now in the gold market. So see if we find some support there. But MACD's suggesting we may be moving lower. Okay. How to trade through moving averages and Bollinger Band. Watch our webinars. Come to our website, hotforex.com. I don't know if I'm sharing. Can you see that? No, it's just I'm just sharing the work session. Yeah. Come to our website, hotforex.com, and there's lots and lots of strategies. The thing about trading, guys, is it's not the strategies. Most strategies are successful. Okay, most strategies win well enough. So it's not the strategy. People spend hours, days, months, whole trading careers trying to find the universal strategy or the strategy that works for them. Most strategies are successful. It's the application of the strategy that's the problem. It's the individual trader. Traders can't manage their emotions. They can't accept losing. They can't accept winning. That might sound a bit odd, but watch my webinar from yesterday, all about risk management and the psychology of trading. Because this business, and it is a business, you've got to treat it like a business. It's very much about you. Sorry, I'm a bit of a rant here at the moment. So you've got to understand yourself first, Zahor, okay, about moving average, about strategies. But basically, in a nutshell, Zahor, let me just explain what the rule is. Here, the moving averages have to cross. So we've got this strategy is a trend following one. So when the market's going sideways, it's no good, really. You want an angle on your moving averages. So here, it's gone up quite now. Here you can see them sloping up. So that's quite a nice one. Then it's gone flat. So you don't really want to be trading it. Then it looks like it's going down. So that would have been here at this hour here, whenever that was, 6 o'clock, 7 o'clock on the 14th this morning. You'd have gone short on gold at this point. And it's gone down a bit, but then you might have been stopped out. Your stop loss should have been up here because that's where it's turned down. Because you've got the green line crossing over the yellow. So the 5 and 9 have crossed. We're in the lower half of the Bollinger Band, so you're going short and down. That's it in a nutshell, Zahor. Obviously, watch the full webinar, full 1 hour webinar on how to trade that particular strategy. But it's not the strategy, Zahor. It's really about you. That's the main thing. So there we go. I hope I've responded to you now. There we go. Respond to me. There we go. There's lots of questions coming in all the time, Zahor. So apologies if I don't respond straight away. I'm sure you'll understand. Euro under big pressure. I think we've breached. There we go. We've breached 108 here on the euro. It's not the 15-minute chart. Miss Lagarde's obviously finished her press conference and we're under 108 for the first time in a while. That trend to the downside. It's the 15-minute chart. Again, Zahor, you can see what was going on here. Big down candle here. In here, short. Your stop loss would have been up here initially, retraced, and then move your stop loss down as the trend goes down. For me, really, on the 15-minute time frame, that down move is a bit too steep. I'd be you'd like smoother, but that's certainly a move. We've got a aligned moving average. We've got the 20-period moving average, the midline, the Bollinger Band, the 9-period, and the 5-period. You can see it's moving down, and you just move your stop loss down as it unwinds, and it's unwinding before our very eyes. So euro breached the 108, and it's moving down quite significantly at the moment, 107.72. It will find some buyers at some point. Somebody decided intraday it's got too cheap. But remember, we're in the last trading day before a long weekend as well. So some position buying going on all sorts of things as a whole. I hope that answered your question, my friend. It's a really good... I'm not just any old guy, Rishi, my friend. That guy, Richie FX. I'm not just any old guy. I'm the main man here, I'm the head market analyst. So this guy, that guy, Rick's, he's wearing a hot forex suit. Yeah, they ask us too. So that's why we always have a white shirt, red tie, and a black suit on. I've got other suits, Rick's, my friend. But very funny comment. I like that. You made my day, my friend. Suji, CAD Kiwi or Kiwi CAD. Let's have a look. We got that here. I haven't got Kiwi CAD, but it was a big mover. Oh, it's been a big mover. Obviously, both central banks have had an aggressive 50 basis point hike this week. I can't see. Let's have a look. What are we looking for? Kiwi CAD. I'm still getting over Rishi's comment. What am I looking for? I'm looking for Kiwi CAD. Here we are. So Kiwi CAD 15 minutes. I've got the daily time frame. So what's going on here? As I say, both central banks, the RBNZ and the Bank of Canada, BOC, moved aggressively with their 50 basis point rate hikes this week. So what's going on? Well, we'd been moving down before this week, hadn't we? Here you see a clear sort of downtrend from the middle of... Whoops. Anyway, let's put the straight line on first. Yeah. So we got to .88 in the middle of, or the early part of March. We rejected it. On an end of day basis, the pair couldn't close over .8765. So that's the high Intraday fractal highs were a bit higher, but since then we've been trending lower, haven't we? So you can see there's the high, and that's your downtrend line really there, and that was yesterday, this week, and so that's been moving and consistently moving lower. You could even put your, I don't know if you want to do that. There's your down channel, basically. So that's rolled over. It's been in the lower half of the Bollinger Band here for all of April. Again, another one. Can you see this here, Suji? You see how the Bollinger Bands are widening? We did nip in there. See how we nipped in? Let me zoom that up for you. Zoom up. So see how we nipped in here, and then we had a big down day afterwards. Okay, so it's nipping in here again as we went up this time, but it didn't break over the. See what's happened here? So we nipped in here. See how it squeezed the day before? Then we had a big down day. But the key thing was on these very small doji candles here, this sideways action here. Quite volatile days, admittedly, but there was no real clear direction. But the direction didn't break the 20-day moving average. We remained in the lower half of the Bollinger Band. That's why the Bollinger Band is going to be so useful. And then the big break came here on the 8th, retraced for 2 days, and then another big down leg on yesterday on the 13th. And what did the retrace do? Well, again, it remained significantly below the 20-day moving average, and we remained in the under half of the lower half of the Bollinger Band. Now we've got the widening Bollinger Bands. We've moved down very, very significantly. Obviously, that's a big move down. We've bounced off that today, that 85.35 low that we closed for yesterday. And again, looking sideways, there was a day not that long ago at the end of February where we were lower than that. So we've tested down to that as well today. I've just realised I'm going to have to go soon, guys. I'm afraid it's a bit of a cop out, isn't it? I've got to go and walk my dogs. So I don't know how many more questions are in here, but I can answer. So I'll get rid of the spam, but I can certainly answer some of the questions for you. That guy, Richie, made me smile, my friend. Anyway, I'll keep going. The dogs can wait for a little while. I can stay here for my clients. So 85.20 was the intraday low, and we've tested it again today. So that's a low we've bounced off today. So that's our daily low. That's a key level, that 85.40 from the big down day yesterday. So today, as we go down, again, Suji, I don't know what time frame you're trading this, but we go down to 4 hours, see how there's our 2 lines we put on from our daily chart. So we've bounced off that. But again, here on the 4 hour, still remains weak, doesn't it? Because there's the midline of the Bollinger Band on the 4 hour, all the way up there at 86. Big round number as well. Again, that would have gone short there. So hard, I don't know if you're still here, but you can see that would have taken you long. It would have worked out, but that hasn't worked out, the long here. In fact, today you would have got long there. You've gone up a wee bit, but then stopped out, presumably on that one there, but reversed immediately to go short. And then that's a nice, you've made a lot of pips on that down move there, and it's still short. So that's still short. The 1 hour ran into that daily low yesterday. There we go. We bounced off that today, but with very little action. See how little the candles are. We bounced up quite nicely, but it doesn't want to go any higher. And again, another one that's still under the mid, not what I'm talking about, still it's over the 20-hour moving average now. So that's provided support on an hourly basis. But right as we speak now, it's testing that midpoint of the Bollinger Band. So we've ran up. Bollinger Bands have come in. We can't break out. We can't break below. And we're above. We're in the upper half of the Bollinger Band on the 1 hour time frame. Okay, that guy, Rich HFX, I'm going to put you back on because that's really made me smile. This guy is wearing the hot Forex suit as advertised. That's made me smile, my friend. Gold Quang Feng, please go away. Hello, please. Why? What's his question? Why euro go down? Rash Mika. The euro's gone down because the market got ahead of itself, thinking that the ECB might actually do something after the Bank of Canada and the Reserve Bank of New Zealand did something quite significant with a 50 basis point rise earlier in the week. There's no way the European Central Bank was going to raise interest rates today, but markets are expecting a bit more of a hawkish outlook. That didn't come. They've just confirmed stuff that talked about earlier in the year, i.e. their additional asset purchase program will come to an end in the third quarter, and there's not going to be any rate hikes before then. So rate hikes might have been pushed back to the end of the third quarter, even into the fourth quarter, when other central banks are moving aggressively. Obviously, the European zone, the European area, is the one that's most impacted by the tragic war in Ukraine and having its biggest impact. So euro very much under pressure. We've got a more hawkish Fed, therefore the euro has come under pressure, and it's gone again. Has come under pressure again and moving to the downside. Where's the euro gone? It's disappeared again. So euro remains very much pressured. That's why, my friend. Is this another spam message? I've tried different strategies and methods, even lost a lot of money while trying until I was. Canal, well, good if it works for you, my friend. Good. But you have to try to spam and get other people to follow it. That's all for that time. What time frame is good for Bolly bands? Any time frame, to be honest, because what Bollinger Bands do, there's lots of information in the Bollinger Bands. They obviously, principally, they're measuring volatility because that's what they are. They're like an expanding, dynamic volatility range. So the wider the range, the bigger the candles typically. If you're in the upper half, it's generally positive. If you're in the lower half, it's generally negative. 90% of all price action occurs within the Bollinger Bands, as John Bollinger Band wrote them and designed them that way. So when they break, the idea is, when they break out of the Bollinger Band, they're quite likely to bounce up, but they can also cling and run and run and run. So there's lots of different strategies you can apply, Aussie J, with Bollinger Bands. John Bollinger designed them around the end of day, but as I say, they're applicable as people use them as mean reverting tools, i.e. you get to the extreme and the reverse. But as you can see, you can get some very significant movement. So you're going to be applied to all time frames. The thing about time frames, Osjay, is you should be trading a time frame that fits with your personality. Not something you think you should be trading. Trade with something that fits your personality. If you're the sort of guy that wants lots of or girl that needs lots of action, you might want to be trading in and out. You don't want any overnight risk. You want to close all your trades at the end of the day. Look at these shorter time frames, these 5 minute and 15 minute, 1 minute, even 2 minute. And remember, with MT4, you can adapt the time frames instead of them just being fixed. Is what MT4 gives you. With MT5, you can actually, you can have 2 minute time frames or 10 minute time frames or 8 hour time frames if you want, or 12 hour time frames. So trade the time frame, J, that fits you and yet fits your personality. That's absolutely key, rather than trying to, trade if you can't deal with the fast moving time frames like these 1 minute charts. Let's see in a bit. You're not making, following the same strategies as you do on higher time frames. That's been a nice move, hasn't it? It looks like a nice move, but you've gone short from 83.63 and then got out round about here at 85.50. So that is a very good move on here on this. And again, this is NASDAQ Kiwi CAD, I should say. So what can I say? And that's the same for all. I would say that's the same for all indicators as well, Osjay, whether you use Bollinger Bands, moving averages, or whatever. They all work, but they're all have their limitations. They all have their advantages. I've always used Bollinger Bands. I quite like Bollinger Bands. There's lots of information in them. When a slope, because they're based on moving averages, the slope's quite key. So when they're flat, not a lot of action's going on, but you can then trade them. Trade ranges. People use them as I said earlier, as mean reverting type tools. So as you can see here, this is sort of exactly what's happened here on this moving average, hasn't it? It's been under it's gone under from this sideways action, but bias lower. You see how they're sloping down still. So we're in the under half of the Bollinger Band now. Went up for a couple of, this is minutes, isn't it? So 5 minutes we were up, and then we've been under. Here we've gone up for about 10 or 20 minutes. But again, we're now back under into the lower half of the Bollinger Band. So, and we're much lower than we were, at 3 o'clock. sorry, at 4 o'clock when I started prattling on an hour ago. So it's you can see how that's biased to the downside. Okay. Azad, thank you very much, my friend. Any more questions, anybody? Because I am going to go, actually, because my dogs are waiting for me. Stanley and Stella are waiting to be walked, so I need to go, if you don't mind. Hope that's okay. Any final questions or any final comments, my friends? I don't need to rush off immediately. Azad, thank you very much, my friend. I appreciate that. But I'm going to put a comment that's really made me smile. I'm going to finish with that guy Richie from YouTube. Has made my day, my friend. But this guy, I'm not only this guy, mate. I'm not only just this guy, and we've obviously not met, my friend. But yeah, this guy, Uncle Stuart. Yeah. Okay. Any final questions, guys? Yeah, I am going to go. Okay. There we go. Let me leave it with somebody who thinks I'm doing a good job. Ode, good session. Thanks today. Have a safe day, my friends. Love to Jamaica. Hope to see you there soon. We should be doing sort of face-to-face seminars hopefully soon around the world again. We got some exhibitions coming up. We're in Thailand and I think the Philippines at the end of May. Thailand at the end of April. Andrea will be speaking Thailand Expo. So if you're in Thailand, come and see Andrea end of next week. 23rd of April, the Thai exhibition. So stay safe, everyone, and we'll see you soon. And as I say, all the very best to you. Let's get rid of that. Let's get rid of me. And goodbye.